Good morning, students. Welcome back to this session. Today we are going to start with another auditing standard. So this is continuing with the series of the audit procedures and certain aspects which the auditors are required to take care during the course of their audit. Though we have touched upon this aspect earlier also, but we'll now get into the details of this particular standard on SA 620. Wherein we'll try to understand what are the considerations on the part of an auditor whenever any expert is required to be engaged. And we'll also consider what are those situations wherein the auditor may consider engaging an expert. And this expert is not the expert of the management, but the expert of the auditor. And before we get into all of these things, let's look at the meanings, the definitions of the auditor's expert. So who is this auditor's expert? An individual or an organization possessing experience in a field other than accounting or auditing. Because these two are the fields in which audit team or the auditor is considered to be having expertise, the relevant experience. So an individual or an organization possessing expertise in a field other than accounting or auditing, whose work in that field is used by the auditor to assist the auditor in obtaining sufficient appropriate audit evidence. An auditor's expert may be either an auditor's internal expert, means who is the part of the organization or the part of the firm of the auditor itself. Means he could be a partner, he could be staff, he could be the temporary staff of the auditor, or maybe a part of the network firm of the auditor. Or he may not be the part of the organization of the auditor, he could be external to the organization. So that means he is auditor's external expert. Now, what is this expertise which is required on the part of this expert? So this will be all about skills, knowledge, and experience in a particular field. Along with this, let's also try to understand the meaning of expert of the management as against the expert of the auditor. Management expert, similar to the expert of the auditor, is an individual or could be an individual or an organization possessing experience and the expertise in a field other than accounting or audit, whose work in that field is used by the entity to assist the entity, means the client, the company, in the preparation of the financial statements. Moving further on this, if the expertise in a field other than accounting or audit is necessary to obtain sufficient appropriate audit evidence, the auditor shall determine whether to use the work of an auditor's expert or not. So let's try to get into this situation, and through those situations we'll just try to look at some examples as to what is this auditor's expert, what is his role, and how will he really be an help to the auditor. So we are currently talking about a situation wherein, let's suppose, XYZ Limited is getting audited. So the audit of this company is getting conducted, and this company has engaged an expert. Okay, now who can this expert be? This expert can be anybody. Yeah, this expert can be anybody. But this expert has to be an expert other than the one in the field of accounting or audit. Means these two areas are not considered to be the one wherein the expert is having a particular knowledge or the skill set which would get covered under this auditing standard. Now, because the management has engaged an expert, that's why auditor. So let's suppose we have the auditor over here. Now, if we look at the financial statements of the company, they have prepared, or it's the combined effort of the management and its expert. So what I'm trying to do is, I'm just changing this. I'm calling this to be management's expert. Now, the financial statements which have been prepared have some part or some contribution from this expert along with the management. So that's why the financial statements which have got produced and which are now required to be audited by the auditor will have the involvement of both these parties. Okay. So now, for the purposes of audit of the financial statements, auditor may also need the expertise, the experience which this expert may have. Let's try to understand what can be the role of this expert. Let's suppose PPE has been fair value. Now, for fair valuation of PPE, management has engaged an expert. Okay. Now, this PPE is going into the financial statements at its fair value. And therefore, the fair value of PPE is required to be audited. Now, who will audit this? Auditor. But the auditor doesn't have the experience, skill set. It's basically about the skill set to audit this particular area or to audit this particular information. Because this is something which requires a different skill set altogether. Okay. Therefore, now what will the auditor need? Either he needs to develop his skill set, which is not easy, which is not possible, because to complete this audit, to develop this skill set is not easy. This is an expertise area. That's why the auditor may also think of engaging an expert from his side. Now, similar to what the management has done, auditor may want to bring in his expert. And now both of them will get into the audit, wherein auditor's expert will not be involved in the audit of entire financial statements. No. He will be involved in the audit of fair valuation of PPE. And because he will get involved in the audit of fair valuation of PPE, so that's why he is contributing to the auditor in the audit of these financial statements, but only limited to the fair valuation of PPE or some areas which are the one over which this particular individual has got expertise. Okay, understood the situation as to what will be the situation which will fit into this. Clear? All of you? Yeah? Now, as regards the requirement of this auditor's expert, this is not mandatory. This is voluntary. But at the same time, we cannot just ignore the fact that this is a kind of necessary situation for the auditor. Because this is not mandatory, that's why auditor may not want to engage the auditor's expert. But because auditor doesn't have the skill set himself, that's why he will not be able to properly audit or may not be able to audit this area if he doesn't engage this expert. So that's why it's a kind of need on the part of the auditor to engage in the audit of the financial statements, and on the basis of which auditor will be concluding on the financial statements. Ambika is a query. Ambika is saying management's expert is covered in SF 500. Is it? So this is about the accounting estimates, if you remember. Yeah. Now let's come back to the expertise of this management expert and the auditor's expert. If we look at the knowledge, the expertise around both of these individuals or around both of these organizations, this has to be assessed by the management for the management's expert and the auditor for the auditor's expert. The important thing is that both of them should be competent enough to carry out their jobs. This expert is involved in getting the fair valuation done, and this expert is required to check whether this fair valuation is done as per the prescribed norms or not. Okay. Now, whenever such audit is conducted, the first thing with which auditor will start will be about checking the competence. Because as we discussed, it's all about making sure that the individual who has been engaged or the expert who has been engaged by the management, does he have the right skill set or not? Because if he doesn't have the skill set, then the valuation which he would have done may not really be the correct one. And irrespective of whether the auditor's expert is engaged or not, that's the first thing that the auditors will start with. So when it comes to this standard, of course, this standard doesn't require this checking of the management's expert in terms of checking their competence, etc., because this is not something which the auditor's expert will do. That part will be done by the audit team itself, because they know this. They will be able to assess as to how the management would have evaluated the competence of the management's expert. But that is the first step to start with whenever it comes to engagement of an expert by the management and its evaluation by the auditor. Similarly, when the auditor's expert is engaged, auditor will also need to ensure that the expert who has been engaged by the auditor is competent enough. He has got the right skill set. So that's why this complete evaluation of the competence of the expert will be the responsibility of the auditor. But this is not something wherein the management will get engaged. This is not required on the part of the management. So management doesn't need to get into this. It's completely on to the auditor. But auditor needs to remember one aspect, that even though this is required on the part of the auditor, still the auditor's expert will need to get into an engagement letter. So let's now try to understand how this entire part will begin. So then we'll get on to the procedures, etc. See, whenever the auditor is engaging the auditor's expert, we need to always remember the fact. And what is that fact? That opinion to be issued on the financial statements is the responsibility of whom? It's the responsibility of auditor. Say for example, fair valuation of PPE is a significant component in the financial statements. Okay, and this is one area which is now in a way handled by auditor's expert. So now in this situation, can the auditor's expert be held responsible for this particular area? Wherein can the auditor say that auditors involved an expert and that's why they are just placing reliance on their work in the audit of the financial statements, and thereby can the auditors or the auditor be relieved of the responsibility in terms of this particular area in the audit of the financial statements? The answer is no. As regards the financial statements which are getting audited and the opinion on them, the responsibility of the auditor by engaging an expert doesn't shift to the auditor's expert at all. It continues to be with the auditor only. Okay, it continues to be with the auditor only. It continues to be with the auditor always. So that means eventually who will be held responsible? Auditor. So that's why when the auditor's expert is engaged, his competence is required to be checked, assessed. And once that is done, then the next step will be to get into the engagement letter. Yes. Oh. So what do we do, Jay? Just 1 minute. तो अब कितनी देर से था? नहीं, बट अभी कितने पार्ट से मैं ऑनलाइन नहीं था, मैं वहां से कंटिन्यू करूंगा इसलिए पूछ रहा हूँ. अच्छा 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 अच्छा, जब आपने बोला था वैसा था. ठीक है. हाँ. ओके. So I understand that the video is now okay, and apologies for this glitch which arose. Is the video all okay now? All of you? So I'm not sure where did I lose. I'll just quickly come back to the points that we have discussed so far. And I'm assuming that the video is all okay now. Now, as regards the auditor, when the auditor is involved in the audit of the financial statements, he owns the financial statements audit completely. So that means he cannot just run away from the responsibility in relation to this area which will be handled by his expert. So even though he has engaged an expert, still the responsibility for the entire set of financial statements, including this item, continues to be with the auditor. He cannot just say that he places reliance on the work of an expert. Not possible. So entire responsibility continues to be with the auditor. It's similar to the management's work. So for the financial statements, who would be held responsible? Management. Okay. So even though they have engaged somebody else, still the financial statements are the responsibility of the company. Okay. And that's why it's very, very important that the auditor, even though he has engaged an expert, is able to assess some of the problem areas properly, is able to understand around the procedures which have been performed in relation to this particular item, so that he can also contribute towards the audit of this particular item. He may not have the expertise, but as around the risks which may be involved in relation to this area, as around the controls which the management may be having in relation to this area, and as around the observations in relation to this area, may then be handled by the auditor with the help of this expert. And that is only possible when the auditor gets engaged, or when the auditor stays involved significantly during the course of this audit. Or even if he is not continuously involved in the audit of this particular area by the expert, he should make sure that whatever auditor's expert has done in relation to the audit of this item is also reviewed by the auditor. Means he needs to just ensure that whatever procedures should have been performed have actually been performed by the auditor's expert or not. And that's why, to begin with, and before engaging him, he will definitely get into the assessment of the competence of the auditor's expert. But at the same time, it is also very, very important that there should be a clear understanding between the two parties. Who are those two parties? Auditor's expert and auditor. So they will also be required to execute an engagement letter. So it's similar to the one which the management would have done. Like auditor will have an engagement letter with the company. Similarly, auditor will also have an engagement letter with the auditor's expert, wherein the scope of work of the auditor's expert will be clearly laid out. Okay, so that there is no confusion later on as to what was required to be done by the auditor's expert and what was required to be done by the auditor. Harsh has a query. Harsh is asking, does the fees charged by the auditor's expert paid out of the auditor's fees? Yes, of course. Auditor's expert is actually a part of an auditor. So that's why if any fees is getting paid to him, who will be the one who is actually getting this fees? Auditor, because he is nothing but the part of the audit team. There could be certain arrangements through which the payment to auditor's expert may be made by the company directly to the auditor's expert, or may be paid by the auditor. So it could be either way around. But generally what we see is that the auditors would pay their expert. Okay, clear on this? Secondly, as around their involvement and as around their engagement in terms of the audit of this particular area, because auditors expert can at times be also external to the auditor. External means they are not the part of the audit team. They are not part of the firm to which the auditor belongs. So that's why auditor would also require the approval of the management. Whenever these two parties will have an engagement letter, that engagement letter should clearly have this consent of the management that the auditor, if he requires, may involve an external expert. And this is because of the fact that the auditor's expert will get an access to the financial information of the company, will get an access to the information of the company which is considered to be confidential. And without the consent of the management, auditor cannot share that information with any third party. Okay, yeah. So some of these aspects which we have discussed were all about the engagement of an auditor's expert. So we have not really looked into the procedures which are required to be performed by the auditor's expert. So now, when this auditor's expert is engaged, his competence has been assessed, his roles, responsibilities have been laid out clearly. We'll now get into this understanding of the procedures which would be performed by the auditor's expert. So now, moving further on to the procedures. So if you look at the extent, timing, nature of audit procedures, what would it involve? It will involve similar set of procedures which the auditor would have performed during the course of his audit of any other item. For example, the planning part. Now, in terms of planning the audit of fair valuation, what would the auditor do? Risk assessment. What would the auditor do? Understanding of the business. What would the auditor do? Understanding of that particular area, the process. So this entire process which would have been followed by the management. Auditor will also look at the controls of the management around any of these areas. The only other thing is that in this entire process, in relation to this particular area or any other area which may have an impact on this particular line item of the financial statements, auditor's expert will stay involved with the auditor. Because some of the audit procedures as to how those are really required to be performed may not be known to the auditor or expert. Because he may be more of a technical person who doesn't have this audit experience or who doesn't have this audit expertise, because he may not be knowing as to how the audit is required to be performed. And that's why how this item is required to be audited may have to be communicated in terms of various audit procedures or may have to be decided amongst these two parties. And that's why whenever this planning of audit will be going on, the involvement of this auditor's expert will be required. Okay. This auditor's expert will therefore be involved in the discussions and the inquiries related to this particular process with the management of the company. on the basis of which the nature, timing, and the extent of audit procedures as around this area will be decided by both the parties. So first of all, it's all about the understanding of this particular area, so that the audit procedures can be designed and which can then be applied by both these parties in terms of execution of their work. Okay. Now, what's the next step? Once this part has been evaluated and the audit procedures have been designed, then the auditor's expert will get into his substantive testing. He will get into his audit procedures, and some of those audit procedures would involve items like testing of controls, how this particular area is really functioning, how this particular process is functioning, and if there are any risks which are attached to this particular process, what are the controls which the management has put in place, and whether those controls are operating effectively or not. Okay. Now this is one area which will be now audited by the auditor along with auditor's expert. Clear? Number one. Number two, depending on whether the controls are operating effectively or not, because we may have two situations: either those are operating effectively, wherein the nature, timing, and extent of substantive procedures is increased by the auditor, and in case the controls are in case those are operating effectively, then the extent of audit procedures is really cut down, whereas the situation wherein those are not operating effectively, then the extent of the procedures is increased. Now, depending on whatever is the outcome of this particular testing by the auditor, auditor's expert will get into substantive testing. So we can say the other part will be the substantive testing. And the other part may also involve some sort of analytical procedures. So what we can see is that as around the nature of procedures, it is again coming down to the similar understanding that we have observed anywhere else. That control testing will be performed on this area, substantive testing will be performed on this area, analytical procedures will also be performed on this area. So it's no different from any other audit. It's just that a different individual has come in who will perform these procedures. Now comes the question that what are going to be the areas or what are going to be the procedures specific to this particular item which will be performed by these experts. Now this is one area or this is one particular item which cannot have a checklist. Now this will vary depending on the item which is under audit. So currently we can talk about fair valuation, but let's suppose it's not fair valuation, it's something else. Then the procedures will have to be changed accordingly. Like Sumit is asking, can the actuary be auditor's expert? See, if the management has engaged an actuary and the auditor also feels the need to have his own expert, then he can definitely bring his own actuary, and his own actuary will be an auditor's expert. So he may become, no doubt. Ashwini is asking, does the auditor need to intimate the management about the appointment as and when the expert is appointed. So it's not about intimating the management, it's about having the consent of the management. Because without the consent of the management, a third party cannot be engaged. Okay, clear? Now, talking about some of the procedures in relation to fair valuation which are required to be performed. So let's understand. When the fair valuation of PPE would have been performed, so I'm just now thinking that fair valuation of PPE was performed by an expert of the management. So the management must have provided him certain information, correct? On which this expert of management would have done the valuation. And what would that information be? For PPE, fixed assets register would have been provided. Let's suppose entire PPE has been fair valued, everything for the time being. Let's suppose. So the management would have provided fixed assets register to the valuer. This fixed assets register would have a lot of information. Nature of the PPE, their location, their age, means in terms of when the PPE was acquired, what has been the useful life over which PPE has been depreciated, what has been the residual values of the PPE, correct? So all of this information would be in the form of fixed asset register. Yeah. Now this will become the base for the fair valuer to value PPE. Number one. When this information is received by the valuer from the management, what would he do? He will then get into his technical expertise. He will then evaluate, and I'm now talking about the management's expert and not the auditor's expert. So now I'm just getting into the process of the fair valuation, thinking about just some of the simple points which may have been considered by the management's expert. Now, on the basis of this data or this information which the expert of the management would have obtained, he would have then looked at the fair valuation. For example, say on land, he would have considered what has been the fair valuation in respect of the land which other companies or maybe the land in the surroundings, and what has been their fair valuation, which will form the basis for the fair valuation of land of this particular company, correct? So we are saying, first of all, data from the management will come, and then the fair valuation of that will be done. And on this fair valuation, if you remember, we also talked about we talked about the fair valuation in the past, that around fair valuation there are various fair valuation methods. Which method is required to be chosen is again the judgment of the valuer. So he would also consider various methods, and depending on the most appropriate method for a particular type of asset, he will do the fair valuation, correct? So now I'm just limiting myself to these 3 points, which the management expert would have considered for the purposes of fair valuation of PPE. And now we will try to understand what would be the procedures by the auditor or the auditor's expert in respect of all of these three items. So first item, data which has been shared by the management to the management's expert. Let's suppose if this data is incorrect. Say in the fixed asset register, 10 machineries have been mentioned which do not exist physically. By mistake, those are appearing. Say in the fixed asset register, the location of the land or maybe the information about the land is appearing and which is incorrect. Okay. So basically we are talking about the accuracy of the data which has gone to the fair valuer. If that data is not accurate, if the data is not complete, what will happen? The fair valuation will go wrong. Yes. And there could be a significant impact due to this. So this becomes the base. So that's why as a first step, what should the auditor do? Auditor should ensure that the data which has been shared by the management to the management's expert, was that correct? And how can this correctness be checked? So first of all, auditor will check whether this entire information is recorded in the books of accounts. Okay, because all of this information should move from the books of accounts only. All of these items should have been appearing in the books of accounts only. There should not be any item which is not appearing in the books of the company but which has been offered for fair valuation, because otherwise the fair valuation may be inflated. Number one, if this is ensured, then the fair valuation or its checking will become more of a technical area over which more of involvement of auditor's expert will be required rather than auditor. Because as around this data, whether this data is in line with the financial records of the company or not, both of them can get into this procedure. But as around the fair valuation, the methods etc. which have been adopted for the purposes of fair valuation, this will be best understood and assessed by whom? Auditor's expert. Because this may again have a bearing on the fair valuation. Because depending on the methods which are chosen, the valuation may change. Correct? So it's about the appropriateness. Now for doing this, auditor's expert will have discussions with the management's expert. So a communication channel should be there between these two, because both of them are expert, and some of these matters related to fair valuation and some of these matters related to fair valuation are quite subjective in nature, on which at times certain options are possible. Means on a particular line item, let's suppose two methods can be easily considered to be appropriate. Now, which method has been considered by the management expert and whether that method is not the most appropriate one as per the auditor's expert or not is then required to be evaluated. Because on the basis of the understanding of the auditor's expert or the opinion of the auditor's expert, if the method is required to be changed, what could be the impact in the fair valuation will then be determined by the auditor's expert. But all of this will require an understanding as to what has gone behind the fair valuation, and the approach of the management's expert is required to be first of all understood by the auditor's expert. Only then he will be able to ensure whether the appropriateness was ensured by the management expert or not. Secondly, as around the fair valuation, because auditor's expert has got expertise in this area, so he would also be knowing about this fair valuation, the methods, etc. Plus, he would also be having certain data which may be available with the external sources. Means which may not really be available with the management, but which may be available outside the organization and which he may have. So there are a lot of portals available. Some of them are available on a paid basis and some of them are available free of cost, which are used by some of these experts for the purposes of assessment of these type of fair valuations. And all of this will be accessed by the auditor's expert depending on the need in relation to any particular procedure. Clear? Yeah. So these are some of the procedures which the auditor's expert would perform. Sumit is asking, sir, is substantive testing or does substantive testing include testing of material aspects? So it's not limited to material aspects. It's about performing the audit procedures which were considered to be the appropriate procedures by the auditor during the course of his planning or which have been reassessed by the auditor during the course of the audit also. Okay. Now moving further. So far we have discussed about the audit procedures which have been performed by both of these parties. Now the next step will be to evaluate the outcome and to now conclude on the basis of whatever the auditor's expert would have done. Okay, so let's understand how can this part be really evaluated. So let's get on to some of these points. The auditor, who is the auditor? This one. So now we are not talking about auditor's expert. The auditor shall evaluate the adequacy of the expert's work. Who is the expert here? Auditor's expert work for the auditor's purposes, including the relevance and the reasonableness of the findings or the conclusion of his expert and their consistency with other audit evidence. See, the outcome which the auditor's expert would have resulted into is then required to be evaluated by the auditor. Why? Because whatever outcome is there, it has to be then considered by the auditor in his overall conclusion as regards the audit of the financial statements and as regards the basis for his opinion on the financial statements. So when the auditor's expert has come up with a finding and the finding is something which the auditor has also accepted in relation to that particular area, auditor should also ensure whether this is consistent with any other audit evidence which he would have obtained. If there is some inconsistency, let's suppose auditor had some discussions with the management at the beginning of the audit. Okay. And now the auditor's expert has come up with a finding which is not in line with what the management told the auditor. So these two are contradictory to each other. So now as a next step, what will the auditor do? Auditor will again get into the discussions with the management, would then try to understand as to what has really impacted this understanding which the management would have given to the auditor. Next, if the expert's work involves use of significant assumptions and methods, the relevance and reasonableness of those assumptions and methods will have to be evaluated by whom? Auditor. See, as we have discussed, that it's the expert who is now getting into audit of this particular fair valuation. Still, because the auditor is required to be ensuring that everything which the auditor's expert has performed is correct or not. So what would he need to do? He would also need to review the work of the auditor's expert. And we may have a concern, we may have a question that, sir, how will the auditor audit the work of auditor's expert? Because he was not technical expert, so that's why he engaged an auditor's expert. So if he was expert himself, why didn't he audit this area himself? So therein, there's a thin line which needs to be drawn, and this review of the work of the auditor's expert doesn't mean that the auditor will be getting into the same role or performing the same procedures which the auditor's expert would have performed. But on the basis of his experience and on the basis of the understanding about the business of the company, on the basis of some of the discussions that the auditor would have had during the course of this particular area in the financial statements, auditor must have also gained some knowledge, and auditor must have also got certain aspects which are required to be evaluated to form his conclusion. Okay, so again, the expectation here is not that the auditor should become a technical expert, but yes, some bit of knowledge which he would have gained, he would be able to ascertain about the adequacy of the procedures which have been performed by the auditor's expert. Okay. Next, if that expert's work involves the use of source data that is significant to that expert's work, the relevance, completeness, accuracy of that source data. What is that source data? The data on the basis of which valuation has been done. For example, if we talk about actuarial valuation, the information around the employees which goes to the actuary, that becomes the source data. Herein, when we talk about fair valuation of PPE, the fixed asset register becomes the base for the fair valuation. If the auditor determines that the work of auditor's expert is not adequate for the auditor's purposes, the auditor shall agree with that expert on the nature and extent of further work to be performed by that expert, or perform any other audit procedure which is considered appropriate by the auditor. Now, this is again a very important area, and at times we may come across this problem. At times it may happen that after the work or the procedures of the auditor's expert are completed, a need for additional procedures is felt. Why? Because of the outcome of the auditor's expert, and which may not have been really the scope of work of the auditor's expert. So now this may have to be increased, which is again okay, because till the time auditor will not get the comfort around this particular item in the financial statements, auditor cannot just give this a stop. Okay, so this has to continue. This cannot just really come to an end just because the scope was not covered. So if the scope has to be increased, this can be increased. So this is one. Secondly, at times it may happen that after the auditor's expert is done with his work, auditor feels the need that whatever was required to be performed by the auditor's expert is done, but still there's something which is still left and which may not really be now performed by the auditor's expert, and wherein the auditor may have to get involved himself. So it's all about some more audit procedures which are required by the auditor and which may not really need the auditor's expert. Therein, the auditor will have to perform those audit procedures. Why? Because eventually the responsibility for audit of this particular item is again with whom? That is with the auditor and not with the auditor's expert. Okay, clear? Moving on to the auditor's report, the reporting requirement. As we have discussed that the auditor is now completely responsible. So therefore, he will not give reference of the auditor's expert anywhere in his report. Okay, which is containing an unmodified opinion unless this is required by law or regulation to do so. If such reference is required by law or any regulatory requirement, the auditor shall indicate in the auditor's report that the reference does not reduce his responsibility. Because even if there is a regulatory requirement which mandates this reference, still the responsibility of the auditor as around the opinion of the financial statements doesn't go away, doesn't shift to the auditor's expert. It's only for the purposes of reference if that is required by the law. Though it doesn't happen like this. It's not done. If the auditor makes reference to the work of an auditor's expert in the auditor's report, because such reference is relevant to an understanding of modification to the auditor's opinion, the auditor shall indicate in the auditor's report that such reference does not reduce the responsibility of the auditor for that opinion. So at times it may happen that a modification has been given. Modification is qualification. Let's suppose qualification has been given on this area. So auditor performed the work along with auditor's expert and found that there was material misstatement in relation to this. So if there is a material misstatement, qualification will have to be given. Now in relation to the qualification, maybe while drafting the qualification or maybe due to any reason, it is considered relevant, okay, and it is considered to be better for the purposes of users of the financial statements that a reference of the auditor's expert is given over there. It may be with the name or without the name, but a reference of auditor's expert is given so that the users can understand this in a better manner. There again, the standard is very clear that ultimately the responsibility is with the auditor, and just because he has referred, just because he has specified that I engage this expert for the purposes of this fair valuation, doesn't take away or doesn't reduce the responsibility of the auditor as regards his opinion is concerned. So the opinion on the financial statements has to be the sole responsibility of the auditor. That doesn't get reduced at all because of any of these reasons. Okay, clear on this? Yeah. So let me just look at your queries. Okay, so now we'll look at some examples to understand about some of these requirements in more detail. And you can just look at some of the areas now. Yeah, so if you look at the screen, you will see some of the areas wherein the involvement of the expert could be there and which may then require the involvement of auditor's expert. Okay. Okay, so let's move on to an example now. So say there's a company PQR Limited, for which two areas require some expertise in terms of the audit. One is certain instruments, can say which are derivatives, for which fair valuation has been performed by an external expert. An external expert of the management. Then there is another area, inventory. Stock data. So basically the physical verification of inventory has been performed by an external expert of the management. Okay. Nagasai has a query. Nagasai is asking, sir, the auditor's expert is not adequate, then why the auditor has to agree with the auditor's expert? I didn't understand your query, but I don't understand your point that you're saying that if the expert's work is not adequate, then the auditor has to agree. So there is no mandate on the part of the auditor to agree with the auditor's expert. If the work of the expert is not adequate, then he will not agree. He will require the expert to perform additional procedures. Clear? Now coming back to this query, so there are a couple of areas on which external expert of the management has been involved. Now as around this topic, management gets this done on a quarterly basis. So this is done on a quarterly basis. Okay, and every quarter, same expert is doing the work. As around this fair valuation of the derivatives, this is done on an annual basis. But every year when this fair valuation of derivatives is done, it's not the same expert of the management who does this. It may change because this expert of the management is fixed. So this has been doing this work for around 2 years now. But for this derivatives, etc., the valuation may be performed by any expert. So every year management looks at the expert, chooses them, and finalizes the valuation on the basis of the expert which is chosen in that particular year. So it's not the continuity. So basically we don't see the same expert getting continued, but as around this area, the same expert has been continued. Okay. Now moving further on to the audit of these two items. Auditor is thinking that both these areas are not the one on which auditor will have expertise. That's why he is first of all assessing the need to engage an expert. On the derivatives part, auditor is not very comfortable because the amount is quite significant and the auditor is also seeing that the external expert of the management is not the one which is continuing. It changes every year. So that's why auditor is planning to involve his expert. Auditor is planning to involve his expert for fair valuation. But as around the stock take, auditor is not planning an expert. Auditor is not planning to engage an expert. Now let me just briefly tell you about the stock take. Stock take for this company is quite technical in nature. It's not like any other stock take wherein you can just go and count the items. It requires measurement of the inventory, which is quite technical in nature, for which engineers are required to be engaged. So it's not something which any individual without having the knowledge of that particular inventory or the measurement criteria, etc., can be done. And it involves usage of certain scientific equipments on the basis of which stock take can be performed. Okay, so currently this is the situation. Auditor has got the comfort on the stock take because of the fact, one, it's done quarterly by the management. So it is saying their frequency is good. So that's why he's just becoming more comfortable in this area. Even though he's not the expert, he doesn't understand too much about the stock take whenever this is performed, but still he participates in that process. Number two, every quarter he can see the same expert is involved. So because of this consistency of the management and the frequency of the stock take or the physical verification, auditor is quite comfortable, and that's why he just want to place reliance on some of these procedures of the external expert of the management, and on the basis of his discussions with the management's expert, he just want to get disclosed instead of engaging his own expert, even though he doesn't understand too much about it, but still he has been able to place the reliance. Now, as around this inventory, again, this happens to be a big chunk. It's a significant part of the financial statements. So we can say that both these areas, in terms of numbers, in terms of amount, are quite significant to the financial statements. All right, clear? So now, in the given situation, there are certain options which we can evaluate from the perspective of the auditor, whether he should have done this or not. Number one, in relation to fair valuation, auditor should involve expert, but for stock take, he should not involve expert. However, if the auditor doesn't involve the expert, then he would need specific representation from the management in respect of valuation of inventory and the inventory balances as at year. Okay, so this will require specific representation. You remember the written representation letter we discussed Okay, so a specific representation of this area should be taken. Number one. Number two is that as regards the derivatives, fair valuation, even if this is not done, would have been okay. Why? Because derivatives are somewhat in the nature of accounting, isn't it? They are more of related to accounting, and on which expertise of auditor would have also worked. So if he wants to engage an expert, that's okay, but this was not really the need. Auditor could have done this on the basis of his knowledge also, and also the valuation which the management would have considered, auditor could have easily reviewed that. So this was not really the need, or I can say this was not mandatory. That's why I'm crossing this. But for the stock take, involvement of expert was a must. Why? Because stock take is one area on which some technical expertise is required, and which is not there at all with the auditor. That's why B option should have been considered. Option number C is fair valuation should have been done using expert of the auditor, and stock take should have also been done using the expert of the auditor. Means if the auditor has not engaged an expert for the stock take, then it's a problem. Even though it's done on a quarterly basis, even though the expert of the management is continuing, still till the time auditor is not very sure about the numbers, about the measurement, etc., how can the auditor just place reliance on the work of the management, and also considering the fact that this is quite technical, which the auditor doesn't really understand. Yeah. Number 4 option is that this fair valuation may not be done. Again, may not be done. So wherever I am crossing it, so I'm just calling it as not necessary. Okay, again I'm saying it's not necessary. Why? It's more of accounting item. And for the stock take, we should remember the fact Nagasai is going with option C, but I think he has not understood option number D. So let's understand this one also. Then you can answer this. For this stock take, the responsibility is not with the auditor at all. Because who has the responsibility for the stock take? It's the management. Auditor is not responsible for the stock take at all. So that's why if the auditor doesn't engage an expert for the stock take, it's absolutely okay. Because it's not his responsibility, number 1. Number 2, when it comes to the stock take, it's all about the physical measurement. It has nothing to do with amount. Yes or no? It has nothing to do with amount. So that's why if this physical verification is not done, this will not have any impact on the financial statements. The only question which may arise is all about the existence of the inventory, because you may all think, but sir, the existence of inventory, that assertion on the part of the auditor, who will test this? Yeah, who will test this? How will the auditor test this? For this, auditor is doing this work, and because this is not really the responsibility of the auditors, that's why auditor is not It's not the situation where the auditor is not performing this procedure. Auditor is performing this procedure, but for performing this procedure, auditor is also taking the report of this expert of the management, who is confirming about that measurement, and which is then going into the financial statements and which is thoroughly reviewed by the auditor. So considering this, the need for an expert is not really there. Okay. So we have these four options. So let's try to assess all of them one by one, and then we'll try to see what should be the correct answer. If you have any option which you want to consider, you may just let me know. Talking about option number one, it requires the involvement of an expert. Why? Because derivative is a technical area, and we are not looking at the accounting of derivative. We are looking at the fair valuation of the derivatives, these instruments, which is not an accounting expertise or an audit expertise. This is an area, something different from these two, and whose impact is also significant. That's why the need for an auditor's expert in this area cannot be denied. So that's why this point is valid, that expert should be involved. The moment we say that the expert should be involved, I think option number B and option number D go off. Because as per these two options, involvement of an expert is not mandated, which is again not correct. Okay. Number two, stock take. It says don't do the stock take or don't involve a stock take. So if we don't involve a stock take or don't involve the expert as an auditor, are we performing our procedures? No. Because in the absence of an expert, auditor is not having the skill set to do this physical verification. So ultimately, what are we into? We are into a situation that the audit procedure is not getting performed, and we are just placing reliance on the representation. Can that be considered to be an appropriate audit procedure, or can this specific representation be considered to be sufficient appropriate audit evidence? Not at all. So that's why this option also goes off. So what are we left with? We are left with option number C. Stock take is one area which is technical in nature. Even though this is done on a quarterly basis, even though same expert is involved by the management over and over again, it doesn't give the auditor the comfort of not performing his audit procedures. The performance of audit procedures on the part of the auditor is absolutely necessary. And an area over which auditor doesn't know much, how can that really be performed? So that can always be performed only when the expert has been engaged. So that's why engagement of an expert becomes important over here. Clear? So what should be the right option? The right option should be option number C. Okay. Yeah. Clear, all of you? So now with this, we come to an end to our discussion on this particular auditing standard. Now we'll move on to next auditing standard, SA 610. Just 1 minute. using the work of internal auditor, SA 610. Now, before we get into the understanding of the requirements of this auditing standard, there are few terms which become important to understand. So let's get on to those terms. Now, as per the requirements of this standard, auditor may use the work of internal auditor. So let's first of all understand what do we mean by internal audit? What do we mean by internal auditor? Whose work may be used by the statutory auditor? Yeah. Internal audit function, a function of an entity that performs assurance and consulting activities designed to evaluate and improve the effectiveness of governance of the entity, its risk management, and internal control processes. Direct assistance. What do we mean by this? Use of internal auditors to perform audit procedures under the direction, supervision, and review of the external auditor. So let us once again get into one situation with the help of which we will try to understand how can the auditor take the help or use the work of internal auditor, and we will also get into some more details around the internal audit function. SA 610. Now, what is this internal audit? I'm sure that you must be knowing about internal audit quite a lot. But as around the internal audit, let's just quickly have an understanding about internal audit. See, internal audit for an organization means either its internal department or a department of its own, or either a department of its own, or it could be a third party. On internal audit, we are going to have a detailed discussion later on also. Internal audit means department of an organization or an external party. External party means someone who is external to the company. Say the company is PQR Limited. So department of an organization could be internal audit department. So this is one. External party means there could be another entity, say XY and Company LLP. XY and Company LLP. So it's an external party who may be performing this function. and let me just call it as a function. Now, what do we mean by internal audit to start with? In an organization, there are various processes. For example, procurement is a process. For example, sales is again a process. Payroll is a process. All of these processes are which create an organization. Means, in an integrated manner, all of these processes make an organization, wherein people are involved, resources are involved, output is there, and that is how the organization functions. All of these processes have got various set of activities, and all of these activities are subject to various type of risks. Risks, for example, maybe the sales should have been made at the market prices, but the sales are getting made at prices lower than what is available in the market. That is first risk. Now, why is this risk there? Because maybe the sales executive is selling the goods at the market prices, but he's not giving this entire amount of sale to the company. A portion of it is kept by the sales executive. And that's why the sale is in a way shown as if it's lower than the sale price. Now, is there any check against it? Yes. The check is that whenever the sales are made, an invoice gets generated, and that invoice has to be approved by a person other than sales executive. Number two, all the collections will always be made in the bank account of the company. There's no cash collection. And you will be thinking, but sir, it's a very simple check. Everywhere it happens. Yes. So everywhere it happens because it's a kind of check to cut down on this type of risk. Correct? Now, there was a risk against which there are certain controls or checks which the management has put in place and which must be operating effectively. Those must have got implemented. Now, there has to be somebody within the organization or from the management team who will be ensuring that all of these controls are operating effectively or not. The risk management plan which the management would have created, is that strong enough or does it require any changes? So these are some of the things for which management is considered to be having the responsibility. Audit committee, board of directors, that means that those charged with governance are considered to be responsible for some of these activities. And that's why to perform all of these things, they may want to set up a function or a department within the organization who will be involved in carrying out all of these checking or checks. At times, if they do not want to create an internal team, they may engage a third-party consultant who will be helping the management in respect of execution of these activities. Okay, yeah, who will be helping the management in respect of all of these activities. Now, having said that, because these are the responsibilities of the management, those charged with governance, and because these teams have been set up, can we say that the need for the statutory audit goes away? No. Statutory audit is different type of audit. which is an audit on financial statements. It's an audit of financial statements of a company. Yeah. Now, for the purposes of audit of financial statements of a company, statutory auditor may also be required to check the controls of the organization, test the controls of the organizations, ensure that the processes of the organization are as per the policies and procedures. Yeah, some of these activities also form part of procedures of the statutory auditor. Correct? Yeah. Now, let's think about a situation. A situation wherein these activities are performed by internal audit department or maybe by third party for an organization, and which is also giving its report, wherein some of the findings, some of the observations, some of the deficiencies are all given to the management, on which some action plan is prepared, and on the basis of that action plan certain improvements can be made as regards the processes, as regards the controls of the organization. Now, what will be the benefit of doing this? If an organization is already doing this activity or is ensuring that all of these controls are put in place, this will increase the comfort level of the statutory auditor, because he will not be the only one who will be involved in this checking. Other than this statutory auditor, there is another team which is also involved on certain activities, on the part of the activities which are required to be performed by statutory auditor also. So that's why he will get this comfort that there's another team which is working on this area. And now, because this function is going on, because the department has been set up or because the third party has been engaged, so what can the statutory auditor do? Statutory auditor can also ensure that whatever is required to be performed by the statutory auditor himself, a part of it also gets added to the scope of this function. Why? Because it's like doing a double check. Something which is required to be checked by the statutory auditor, and because the statutory auditor cannot check everything on 100% basis. That's why if the checking of those areas which the statutory auditor will check on a test check basis can also be done by the internal audit function or maybe by some other team, then they will be able to contribute to whatever statutory auditor requires. Yeah. So it's like there's another team which is also doing the work which the statutory auditor is required to do. Or you can say also doing part of the work which the statutory auditor is required to do. Now, this standard deals with an understanding of use of the work of this function by the statutory auditor. Secondly, this auditing standard also clarifies that because the statutory auditor will use the work of this function, what will be the responsibilities of the statutory auditor after this? Or can the statutory auditor in this situation place reliance on the work of the internal auditor? Yeah, clear on this? Okay. So have we got the understanding, have we got the perspective into which we need to get into? Yeah. So what we can do is we can now take a break. So we will continue with our understanding around the procedures, around the requirements, or around all of these stuff after the break. And we'll also look at the procedures which the internal auditor will have to be will have to perform, and on which he can just really support the statutory auditor. Clear? Yeah. So let's take a break of 10 minutes, and after the break, we will continue with our discussion. Hi, so we'll continue with our discussion on this SA10 now. So we are talking about the requirements which the statutory auditor may have from the internal auditor in terms of getting the support in relation to the audit of the financial statements. So we have this statutory auditor and we also have this internal auditor in place. So let's look at some of these points around the requirements. External auditor shall determine whether the work of the internal auditor or the internal audit function can be used for the purposes of statutory audit by evaluating the following. First, the extent to which internal audit functions, organizational status, and the relevant policies and procedures support the objectivity of internal auditors. Number two, the level of competence, again very important area, the competence, and as around that competence, what's the comfort level of the statutory auditor. Third, whether the internal audit function applies a systematic and disciplined approach, including quality control. Okay. Now let's get back to our discussion and let's get back to this situation and let's try to understand what could be the possible scenarios and what could be the ways through which both these teams will in a way coordinate with each other. The basic function that we are looking at over here is statutory audit, or we can say audit of financial statements. So what's the premise for this entire discussion? Audit of financial statements. For the purposes of audit of financial statements, statutory auditor is now evaluating the work of this. Now, whenever he will evaluate the work of the internal audit department, he would first of all want to understand that what are the areas, what are the things which the internal auditor has been covering in its scope. Because many a times the scope of internal audit or the internal audit department, whatever be the case, whether it's external or internal, I'll now use the term internal auditor, whether the scope of internal auditor is something which will help the statutory auditor or not. So his scope, because his scope should cover the areas which would be required by the statutory auditor. Because his scope, if they don't cover the areas which would be required by the statutory auditor, then they may really become the problem. Correct? Secondly, the competence. Now the internal auditor, we cannot say is not competent, but the assessment of the competence of internal auditor by different persons may be different. And because it's the auditor who has to evaluate the internal auditor from his own perspective, not from the perspective of the management, but from his own perspective, because he is looking at some support of the internal auditor. So therein, it becomes important to understand the competence of the internal auditor. Now, for coordinating this entire thing, A coordination between these two parties are important. Whenever this function has to start as around the internal audit, what can really be done is a discussion between these two parties, wherein the management will also be involved, because management is coordinating with these two parties also. So the first thing to start with should be to understand the requirements of the statutory auditor by the management from the statutory auditor, wherein the statutory auditor can explain as to which all things are required from the internal audit function, and if those are possible for the internal auditor to perform, then how can the statutory auditor best use all of those activities or the output of the internal auditor? So there will be a joint discussion. There will be a planning around those procedures, around the areas to be covered by the internal auditor. Now, this would be dependent on the scope, as we have discussed, and the scope, even though this is not in place, may be increased. Okay, for example, let's suppose the scope of internal auditor only covered a couple of processes. Let's suppose sales and purchase. Okay, these two processes were covered within the scope of the internal auditor. Yeah. Now, the statutory auditor is quite worried about the payroll function, because in the last years, during the course of the audit, in the last years, controls were found to be missing in relation to this process. Okay, there were significant gaps in terms of the controls around this process. There were a lot of misstatements in this process, and that's why this is going to be one of the key areas on which auditor plans to focus on. And that's why, if the internal auditor before the statutory audit starts can really focus on this particular process also, then the outcome which will be generated through the internal auditor in respect of this process will help the auditor, and will not only help the statutory auditor, will also help the management to identify the gaps which are still continuing, to identify some of the problems which may have led to the misstatements, which could eventually flow into the financial statements. And how can all of these things be avoided? And how can all of these things be planned? By having a discussion wherein statutory auditor and the internal auditor can sit together, and they can understand as to what all items are getting covered by the internal auditor and which all additional items are the one which internal auditor can cover, or maybe focus more on some of those items which are considered to be significant risk areas of the statutory audit. So it's all providing a support to the statutory auditor. Now, one thing is very clear on this aspect as well. Even though statutory auditor is planning to use the work of the internal auditor, he is just taking this team of the management as a support to himself. It doesn't mean that the part of the work which the internal auditor would do would then not be required to be done by the statutory auditor. Or in other words, we cannot say that to the extent of the work performed by the internal auditor, statutory auditor would get relieved of his responsibilities as around the audit of the financial statements. No, it's not like this at all. As around the responsibility for the audit of the financial statements. It's with whom? Completely with statutory auditor. It's completely there with statutory auditor. As regards the responsibility to provide opinion on the financial statements, it's completely with whom? Statutory auditor. Just because some of these activities which are performed by a third party have been used or will be used by the statutory auditor, he cannot just simply say that he will be relieved of his responsibilities. He cannot just simply say that he has been placing reliance on the internal auditor. No, that's not possible. He cannot place reliance on the internal auditor. It's again something which is helping him, which is giving him more comfort during the course of his audit procedures. But that is not at all taking away any of the responsibility of the statutory auditor as regards the performance of audit or giving an opinion on the financial statements. Clear? Now, if we look at the internal audit function would primarily focus on what? This would primarily focus on the processes. Processes means the way a particular department is required to function, whether that is functioning as per the policies and procedures of the company or not. This department will also be looking at the risk assessment. And what's the risk? A very simple risk we can say is that a particular activity of a department, let's suppose of the purchase department, is not going on as per the policies of the organization. So it's a risk against which there must be certain controls. And those controls may have been established or may need to be established. Both of these things will again be assessed by whom? Internal auditor. Because if the controls are missing, they need to be put in place. Then it's something which the internal auditor would target. If the controls have been established, those have been implemented, but those are not operating effectively for any reason, then once again it will be brought to the knowledge of the management by the internal auditor. It will also be discussed with those charged with governance. Those charged with governance. Okay. Now, moving on to the discussions with those charged with governance. And again, I'm not just digressing from the basic concept of the audit of the financial statements. Internal auditor is also the one who reports to those charged with governance. Internal auditor should also be the one who is independent of the organization. He should not really be biased, because if he would become biased, then the responsibilities on his part would not be executed in a proper manner. So whenever the discussions would take place in relation to the internal audit with those charged with governance, statutory auditor may also participate in those discussions. So now we are coming on to the output of the internal auditor. So he has done whole set of activities. He has performed his procedures. He has looked at the processes. He has looked at the controls, etc. Everything he has done. Now comes the time of his report, which he would have shared and discussed with the management, maybe at the draft level. He would have obtained the observations of the management, comments of the management, he would have then finalized his audit report or the internal audit report, and which would then be discussed with those charged with governance. Now, when this report gets discussed with those charged with governance, and once the report gets finalized, during the course of these discussions, or during the course of the discussions of internal auditor with those charged with governance in terms of the final report which has been shared, statutory auditors may also participate. And we can also say the output, the report of the internal auditors would be reviewed by the statutory auditor. Because through this report only, statutory auditor would get to understand about the findings, about their observations, about their recommendations, about any improvements which are required in terms of any processes. And if there are any financial impacts in relation to any item of the financial statements, all of these things would then be focused or may then be focused on by the statutory auditor. Let's suppose internal auditor has completed the work. Okay. And in respect of internal auditor's report, certain observations are there. For example, first is finance. So in terms of financial statement closing process or the bookkeeping, which has been audited by the internal auditor, there are certain observations. Those observations are significant. Now, what would the statutory auditor do? Statutory auditor would also look at these significant observations. If there are any weaknesses in the controls, statutory auditor would look at those observations in terms of designing his audit procedures. Because this was the part which statutory auditor would have anyways performed and is still required to perform. But at least he has got the indication that there are problems, or there could be certain problems on which he needs to now focus on. He can accordingly plan his strategy, he can accordingly plan his audit procedures in respect of this particular area. He may decide the nature, extent, and timing of his audit procedures on the basis of some of these types of outcome of the internal audit report. And once again, when he will be reviewing the report of the internal auditor, he will just not blindly follow that. He also needs to look at it carefully. He needs to analyze it carefully. Because if he will not look at it carefully, then it will be assumed as if he is just placing reliance on this. Maybe the significant observations which the internal auditor has reported in his report could not be having any financial impact. Those are significant as regards the operations of the entity are concerned. But maybe from the financial perspective, or in terms of having any financial impact, its financial impact is negligible. Now, whether that particular item would still be focused on by the statutory auditor or not, this can be best understood and assessed by the statutory auditor only when he gets into all of these details. He discusses, if required, some of these findings of the internal auditor with the internal audit team. He may also want to have discussions as around all of these items with the management of the company. And on these areas, he may also want to perform certain procedures on his own. Even though this has been tested by the internal auditor, still he may want to perform some of his own audit procedures, because as around the requirement of the audit procedures on his part, that cannot be denied. That has to be put in place. Yeah. We just can't say, as we discussed, that the responsibility of the auditor gets reduced just by having an internal auditor in place. No, it's not like this. It has to be there, it has to be in place. Clear? Yeah. So now, moving further on to some of the requirements of the internal auditor in terms of some specific areas which are generally looked at by the auditor. See, in case of every organization, whether it's small, large, internal auditor may not be covering each and every process, but there are certain processes which are considered to be of significant importance. Some of those processes include sales, procurement, finance, which one would generally see getting covered by the internal auditor. Secondly, in case of large organizations, to do the internal audit is again a process which goes on throughout the year. So it's done in a phased manner. For example, in the first quarter, let's suppose these two processes or these two items have been covered by the internal audit. Let's suppose in the next quarter, finance and payroll have been picked up. Let's suppose in the next quarter, inventory has been picked up. And let's suppose in the next quarter, accruals, taxation has been picked up. So this is how this phased manner of various processes getting audited by the internal auditor keeps happening. And some of these reports also take time to get finalized because these will go for management discussions. After the management discussions, internal auditors may be required to perform certain more procedures, and then the report gets finalized. So it may happen that the report of the first quarter may get finalized maybe towards the beginning of the third quarter of the financial year. Now, in such a situation, practically what do you see? Practically at times, statutory auditor may want to have discussions with the internal auditor to understand some of the outcomes of them which may not have taken the shape of the final internal audit report. But at times, if the management and the internal auditor are both comfortable, they may also want to share draft internal audit reports with the statutory auditor. And the entire objective, and please try to understand, the entire objective of this coverage by the internal auditor and its usage by the statutory auditor is what? That it's a kind of support which is provided by the internal auditor's work to the statutory auditor. It's a kind of support which is made available to the statutory auditor. It's nothing beyond that. And by getting this support, by getting this support, statutory auditor can design his audit procedures. Okay, clear on this? Yeah. So with this, what we can do now is we can look at one example and we can look at some of the requirements related to internal auditor, and we'll just see as to how do we apply that in terms of that situation. Say for example, a company ABC Limited, in respect of its financial year 2019-20, or we can say 2021. is planning to get the internal audit done. Okay. And in terms of the internal audit, there are certain areas which the statutory auditor would like the internal auditor to focus on, because the scope of the internal audit covers everything, all the processes in a phased manner. But there are certain items on which statutory auditor would like the internal auditor to focus more. And those items include laws and regulations. That means the compliances. This is one. Secondly, compliances related to various laws and regulations. So it's not really limited to any particular aspect. It's covering many things. Secondly, the production function. Production function. Okay, so these two are the areas which the statutory auditor has requested internal auditor to focus on or consider these areas in more detailed manner extensively. So that's the request of the statutory auditor as around these items. Okay. So in relation to these two areas, the coverage is already there on the part of the internal auditor. So it's not that internal auditor doesn't cover this. These are already covered, but this time around, statutory auditor has requested focus on these areas. Now, these areas will be completed by the internal auditor during the last quarter. So that means last quarter, which is ending 31st March 2020. Okay. And the report, etc., in relation to these items will therefore be available. Say expectation is around April end. Yeah. So that's the expectation. The company has also planned to get the statutory audit completed. So the plan of statutory audit is that it should get completed by 31st of May 2021. So that's the plan. Okay, that's the plan. Because on the 1st of May 2021, everything will be signed off by the management. So it's all that everything will get closed. And with the understanding that internal auditor will be focusing on these areas. So the work of the internal auditor has been going on. So we are into March now. And the statutory auditor has already started the audit because it's a large company. So that's why they will also need time. So they started their audit sometime in February itself. Okay. But let's assume that the statutory auditor have been able to conclude their work by this date. Say this date has actually come and the statutory audit is completed. So they are done with everything. Statutory audit is completed. Statutory audit is completed. Just give me 1 minute. Okay, statutory audit is completed, but for some reason, due to the processes, etc., which are reviewed by the internal auditor, and because of the lack of information and because of some coordination gaps, etc., the work of the internal auditor could not get completed in respect of these two areas. Forget the focus, the work is still going on. Work is going on. It's not completed. Okay, yeah, work is still going on. And in terms of the review which has been going on, during the course of the discussions related to statutory audit, internal audit teams also had certain discussions with the statutory auditor. They also conveyed some of the observations related to these two areas, particularly on which statutory auditor wanted their support on, but they have not been able to conclude as yet. And forget the report. Huh? So forget the report. Report is not possible at all. It's the work which has been still going on. Now, in the given situation, we need to understand how the statutory auditor would be dealing with this situation. Okay, we need to understand how the statutory auditor would be dealing with this situation. So there are a few options which are available. Number one, statutory auditor should delay his audit report till the conclusion of internal audit and final internal audit report. So this is one option, that the statutory audit should be delayed. Means even though they are done with everything, this should get delayed. Number one. Number two, we understand the fact that statutory auditor actually didn't perform much of the audit procedures which they would have performed if the internal audit was not going on. Okay, so they cut down on their audit procedures considering the fact that the internal audit will get completed and they will get the report by April 2021, and they waited for this even up to 31st of May for this final report to come. So that's why they have actually cut down on their audit procedures. And now, considering that everything has been finalized, everything has been agreed with the management, so that's why statutory auditors are not left with any option but just to conclude their audit and issue the final audit report, even if there are a few limited procedures which they have been able to perform in respect of these two areas, and which is okay because it's a kind of default which has taken place on the part of the management. Statutory auditors are not really responsible on this because there is complete documentation available with the statutory auditor through which they can substantiate later on that all of these things were agreed previously between the teams, and finally this was not received by the statutory auditors. So that means statutory auditors to conclude basis limited procedures in respect of these two areas. But it should be concluded on time because that has been agreed, and if timeline has been agreed, so this must be followed. Option number B. Option number C. Next option. Option number C. You can also look at all of these options and start thinking about these options as to which one you would consider to be the most appropriate. Option number C. Option number C is that in respect of these two areas, there's no doubt that the statutory auditor will have to end the audit and issue the final audit report. So that's why the best way to handle this situation will be to modify the opinion and issue report on 31st of May. Okay. So statutory auditor will modify the audit opinion and issue the audit report. So that's the best way over here to deal with this situation. Correct? Next option. Next option is considering the fact that statutory auditor has performed limited procedures, which was not appropriate on their part. This was not really appropriate on their part because they knew that delays are taking place and they knew that the delays may continue, and they would have also understood on the basis of their regular discussions with the management as well as the internal auditor that this part may eventually not get completed, and they may have to end with the situation wherein the internal auditor may not be able to share their audit report with them. Now, considering this situation, statutory auditors should have performed their own audit procedures in respect of these areas. But if they have not done this, then it's definitely a problem of their part. It's a deficiency on their part, but they cannot just continue with this deficiency. So they will have no choice but to extend the audit. They will have no choice but to extend the audit and perform required procedures. In relation to these two areas, which they didn't do earlier. Perform the required procedures in relation to these two areas. Which out of these options you would consider to be the most appropriate one? In case you have any thoughts around this, Naga Sai is saying it should be option number D. Any more thoughts from any of you? We will then get into our discussion related to each option. Quickly, any thoughts from your side on this? So we'll now get into these options. Option number A. Statutory auditor should delay his audit report till the conclusion of internal audit and then receive the final audit report. Now it's about creating a dependency on a third party. Internal auditor is not the part or is not something which is a necessity on the part of the management. It would definitely act as a support function, But if this support function is not there, then the statutory auditor cannot just simply say that because this task is not completed, so that's why they will not be completing the audit. Irrespective of whether the internal audit is completed or not, statutory auditor will have to complete his work. So that's why this option cannot be considered to be correct. Okay. This option cannot be considered to be correct. Option number B, to say that now the situation is such that the timeline has been committed, and that's why even if the procedures cannot be performed, just to conclude it may be a very risky situation. So it's like closing the audit without performing the appropriate audit procedures or the adequate audit procedures, which may not give the auditor, or currently the auditor may not have the sufficient appropriate audit evidence. So that's why this option can also not be considered to be the correct option. Next is to modify the opinion. See, this appears to be a situation wherein the auditor has not performed the work, and just because he has not performed the work, he is considering as if there is a misstatement, which is again not appropriate. Till the time auditor has not performed the procedures on the basis of which he could have found certain material misstatements, he cannot think of giving a modified opinion. Currently, the situation is such that the auditor has not performed this work, for which he cannot say that the financial statements are misstated. Okay, yeah. So it's a very weird situation, and this is not at all acceptable. Let's look at option number D. That's the only option left, but let's also try to understand this. Extend the audit, which at times may be very, very difficult on the part of the auditor, because a lot of activities are generally planned by the management in terms of investors meeting, in terms of bankers, in terms of various other things which they would have planned after the completion of the audit. And if the audit doesn't get completed on time, then this may really impact some of those activities or some of those planned things on the part of the management. So that's why extension of the audit is generally not appreciated by the management. But in the given situation, there's a deficiency on the part of the auditor, and that's why auditor will have to request the management to extend. Otherwise, auditor runs the risk of not performing the audit procedures and giving an audit opinion, which is again not advisable on his part. By taking this extension in respect of the timeline for completion of audit, what would the auditor do? Perform those additional procedures which he would have performed if this internal audit doesn't get completed. Yeah, clear on this? Okay, so that's why in the given situation, option number D seems to be the correct one. All right, all of you clear on this? And with this, we also come to an end to our discussion on this auditing standard. We can now start with another set of auditing standard on the audit reports. Very interesting part of the audit reports, of the auditing standards. That is all about audit reports. Okay, yeah. So if you have any questions, any doubts, you may just send across your queries. Before we get on to the next topic, we can have a discussion on your queries. Okay, so now we are starting with another set that is about auditors report. So we are now moving on to essay 701. It's about key audit matters. We briefly touched upon this key audit matters, if you remember, in our previous sessions. And now we will get into details of this. So before we talk about this key audit matter, let us just quickly understand about reporting. And we have discussed 4 stages of audit: planning, execution, then comes the conclusion, basis which reporting is done. These are the 4 stages, correct? See, if you look at the company or the management or the client, it's the report which happens to be only deliverable from the auditor which goes to the company. When it comes to the statutory audit may require a lot of procedures to be performed by the auditor, and which may take, say for example, 15 days of the work at the client place or in relation to the client, or the work may go on for say 3 to 4 months, or the work may go on for 1 month, or maybe at times more than that. It may vary. But all of these procedures, all of these work which the auditor does comes down to just a single document, and that is called as audit report. Because everything that the auditor is doing is getting delivered to the client in the form of auditor's report. In the form of auditor's report. So that's the ultimate deliverable. That's the deliverable which goes to the client from the auditor. And that's why this reporting is of extreme importance, because all of these efforts which are put in by the auditor as well as by the management in respect of the audit of the financial statements come down to this single document. Correct? Yeah. And in this single document, there's just one thing which is most important, and that is about expression of opinion. Expression of opinion. Opinion of the auditor, whether the financial statements are giving a true and fair view or not. All right, yeah. So this is the only thing which gets delivered. So please try to understand that so much efforts have been put in for what? For a single document. So that's why this document carries a significant importance. There's no doubt that the audit procedures, the field work which is performed, that is very, very important, because on the basis of those procedures, this final reporting will be done. But at the end, it all comes down to one single document, that is auditor's report. And that is what goes from the audit side to the management. This is the only document which is provided by the auditor to the management. Other than that, there is no document which is going from the auditor to the management. Otherwise, it's all services. It's all services which are being supplied. Correct? Now, I'll not come on to all of these points related to the auditor's report about expressing an opinion, about what is this opinion about the true and fair view. You all are quite familiar with this. And anyways, we have a separate auditing standard which deals with all of these requirements related to the auditor's report. Other than all of these requirements, there is one more requirement which got added few years back, so it's been 3 to 4 years now, which got added to the auditor's report, and that is called as CAM. Very popularly, this is called as CAM. CAM means Key Audit Matters. So there is a section of the auditor's report which requires auditor to comment on key audit matters. So let's first of all understand what are the key audit matters and why is this section considered to be important, what is the meaning of key audit matters, what is required to be included over here. Currently, this section of the audit report is not mandatory to every entity. So we can say it's the listed entities which are required. And when it comes to the listed entities, it means the audit of the listed entities or the audit report of the listed entities which require this section to be commented on by the auditor, or this section to be included in the auditor's report, and not all the companies currently. Key audit matters in very simple terms means significant matters. Key audit matters. Key audit matters simply means significant matters during the course of the audit. Let's look at the definition of key audit matters. Those matters that in the judgment, in the professional judgment of the auditor, were of most significance in the audit of the financial statements of the current period. Key audit matters are selected from matters communicated with those charged with governance. And there are certain parameters which are given by this standard around the assessment of key audit matters. So we'll now come on to these key audit matters. There are few things which we can understand from the definition of key audit matters. One, it is based on judgment of the auditor. That means there's no really a rule which can be applied, or I cannot really get onto a checklist that fill in this checklist, this is the outcome on the basis of which a particular matter will become key audit matter. Number one, it's based on judgment. And the judgment of the auditors may vary. So one auditor may consider a particular matter to be a key audit matter, which the other auditor may not do. Number one. Number two, it says that it should be most significant. Or I can say one of the most. Okay, one of the most significant matters. Number three says it should be a matter during audit of current year or period. Now this is important to understand. Okay, and I'll come to this. Fourth, it says it should be a matter which has been communicated or will be communicated to those charged with governance. So from the definition, we can pick up these four important considerations in relation to CAM. Other than that, there are some more points which we'll have to understand in more detail, but this is something which is coming from the definition only. So let's try to analyze some of these points. One of the most significant, during the course of the audit, there will be so many observations of the auditor. Generally, you'll see a lot of observations are there. And even if there are no observations, there are many areas which are considered to be of importance during the audit. For example, if we audit the financial statements, inventory is considered to be an important area. Generally, revenue recognition, we have discussed, it's considered to be a risky area and significant risk area. So that's why it's also considered to be important. Third, if we look at some of the estimates in relation to the litigations, etc., this is also considered to be a critical area and an area which requires a lot of judgment on the part of the auditor. Okay. Similarly, for certain companies, capitalization can also be an important area and a very, very challenging area, wherein some of the problems, errors may also have been identified as regards the capitalization. Correct? Yeah. Now, considering that all of these areas are important, can we just simply take all of these matters to the auditor's report? Because now we are talking about a situation wherein these matters will be given in the auditor's report, will be mentioned in the auditor's report. And what will be mentioned in the auditor's report? Description of matter will be given. Description means what was that matter? Why was that significant? Okay. Number two, the reason for picking up that matter as CAM. Reason for picking up that matter as CAM means why that matter was considered to be key or key audit matter or a very significant matter. Number three, if that matter was key audit matter, that's okay. But what were the audit procedures in relation to that matter? What all procedures have been performed by the auditor in relation to those areas or those items in the financial statements which he has considered to be a CAM? So these are the requirements, I would say, to be reported in the auditor's report. Yeah. Next, in the auditor's report, auditor will also be giving his conclusion that because it was a significant matter and which was considered significant enough that it not only went to those charged with governance for the discussion, it is also going to the public domain, because if you are reporting somewhere in the auditor's report, then the auditor's report will be available in the public domain. It will go out to the users of the financial statements. Anybody can access that. Yeah. What has been the conclusion of that matter? Was there any misstatement because of this matter in the financial statements due to which any modification has arisen? Or if there was no misstatement, which was completely okay, what has been the conclusion? Is it that even though this matter was significant, but still this didn't result in any modification in the auditor's report? It didn't result in any misstatement in the financial statements. So all of these points in relation to any CAM are required to be given in the auditor's report. Okay. Another point which the definition covers and says is that all of these matters should not be the continuing matters. Say for example, during the course of 1920, a matter which was reported in 1819 was picked up. A matter which was reported in 1819 was picked up. Okay. Then in 2020-21, auditor is planning to pick up the same matters which have been repeated in the previous years. Why? Because if a matter was significant, reported as CAM in the previous years, that will continue. No, that's not the understanding. That's not the requirement. Standard says that in respect of reporting in the current year's auditor's report, the matters which pertain to only the current year should be considered, should be reported. It doesn't mean that if a matter has been reported in the previous years, it cannot be reported again. It can definitely be reported again, but it should be reported again just because of the fact that this was also a significant matter during current year. Just because of continuity, it should not become a CAM. If current year also this matter was significant during the course of the audit, then it can definitely arise. Okay, so it's all about looking at the current year's matters. And we have understood on the basis of our previous discussions, on the basis of our requirements related to communications to those charged with governance, that if there are any significant matters, then a communication of those significant matters is made to those charged with governance. Correct? Yeah. And now we are looking at such areas which will also form part of audit report. So there is no doubt that all of these matters will go to those charged with governance. Isn't it? If we are planning to include something in the auditor's report, then obviously those matters will also go to those charged with governance. Communication will be made to those charged with governance by the auditors that the auditors are planning to include these matters in the auditor's report. And the auditors will be including all of these pointers in the auditor's report in relation to all of such matters. Okay, clear on this? Yeah. So let's think about certain examples which can become CAM on the basis of whatever we discussed. So there is again a criteria given under the standard, which is again very judgmental for the determination of a CAM. We'll get on to that part as well. But before that, let's think about some of the matters which may become CAM. During the course of the audit, inventory valuation was a big problem. Why? Because there were a lot of errors, a lot of misstatements in this. and we are saying numerous. So it's not about the total amount of misstatement which was important, but the number of mistakes which were made in terms of the concepts which were applied by the management for the purposes of inventory valuation were numerous. So that's why we can say this was susceptible to a lot of errors, and the errors were actually observed by the auditors during the course of the audit of inventory valuation. Number one, due to which it also involved significant time. Due to which it also involved significant time. And the time involvement was of the senior members of the audit team. So the senior members of the audit team were required to spend a lot of time, and this senior involvement of the audit team was also because of the fact that this valuation was a bit complex. Due to complexity which was involved. And this complexity was also one of the reasons of misstatements in the inventory valuation. So you can understand the inventory valuation. Yeah. So there was a chain, and some of the things were interconnected. There was complexity which resulted in more time, which resulted in misstatements, and because of the misstatements, focus also got increased, time also was planned more, extent of audit procedures by the auditors got increased, yeah, and which eventually resulted in all of these things. Now the question arises that should this matter really be taken to a CAM or not? And the immediate thought which will come to our mind is that what's been the conclusion of this matter? That in respect of this matter, was there any modification in the auditor's report, or the report was all clean? There was no modification, report was all clean. And the immediate thought will be that if the report was all clean, okay, the report was all clean, the conclusion was all okay, there were no material misstatements, then of course this should not be taken to CAM. But if there was a modification, then it's a serious matter. It should be taken to CAM. Is that the thought that comes to your mind? Yes or no? And this is because of the fact that till the time the matter will not be qualified, till the time matter will not be resulting into a modification, we don't consider that matter to be serious enough to be reported anywhere. But that's the perspective which changes over here. So currently, if we look at CAM, we are not inclined towards getting into those matters which have got reported as a modification. Because if we look at those matters, if we look at those areas in respect of which there were modifications in the auditor's report, then those matters were always forming part of the auditor's report. There was no really a need to include those matters now in the form of a CAM. So that's why now under CAM you need to remember one thing, that even if the opinion is clean in respect of this matter, still this matter will have to be evaluated by the auditor in terms of its communication, in terms of its inclusion as CAM in the auditor's report, and for which we will get onto the determination criteria in the next session, because again that's a detailed discussion that we need to get into. For the time being, I'm just concluding my discussion on this standard over here, and I have this query from Nagasai. He's asking, does this matter require communication to those charged with governance? Of course, yes. See, the moment you make this matter as a key audit matter, this will definitely require a communication to those charged with governance. And also please try to understand that if a matter is getting reported anywhere in the auditor's report, then this entire audit report is something which the auditor discusses with those charged with governance. So that's why definitely this will get communicated to those charged with governance. All right, clear on this? So with this, we come to an end to our discussion for today's session, and I think let me just look at your queries. I think there were certain queries regarding the recorded sessions. Once again, though Karuna clarified in the last session that these will very soon be made available to all of you. So I don't see anything which still remains. So maybe we can then end our discussion over here. Yeah. All right. Yeah. So all of you, thank you once again for your time and for your wonderful participation. Thanks so much. In the next session, please make sure that you revise this auditing standard. It's a very, very important auditing standard and a new one also. That's why it's important from the examination perspective also. And we'll be continuing on this. And that's why your revision is important. All right. Thanks so much.